Meantime, we did learn overnight that a settlement may finally be here when it comes to the Greek debt issues. We looked at the euro rally from a 10-month low against the dollar after European leaders promised aid may be there for Greece. So it would be a mix of IMF and bilateral loans should Greece need it. The question is this enough support for the euro, or is it only temporarily a sigh of relief? Sebastien Galy is a senior currency strategist for the biggest bank in France, among the top 10 currency brokerages in the world, BNP Paribas. He joins us from their office here in Manhattan. Good morning to you, Sebastien. I mean, this has been back and forth. We've seen so many different versions of suggested frameworks. What happened overnight, and how did that change your outlook for the euro?
It did not actually confirm our outlook. We're very bearish on the euro. We essentially adopted the German position in Europe. Everybody adopted it and pretended it was a European position. It is a very harsh position. It will force deflation within the eurozone. We know that what the Germans want is essential to bring the fiscal house in order. That's not only Greece, Portugal, Spain, all the southern countries, but even many of the northern ones. And they are cleaning up the house. That will mean a negative shock to growth in Europe going forward. Overnight, what happened is essentially going into Asia and especially going into Europe. People were betting on the bearish story, and they've been taking a lot of profits at this point in time. So we think top side is about 134.50 on the euro dollar, and we think eventually it's going to resume its downtrend in the coming days.
Yeah, this is a highly popular short, though, when it comes to the euro. It would seem there's potentially room for plenty of volatility here.
Yeah, I mean, what essentially hedge funds have done is they had positions in Greek CDS which were quite well publicized, but as early as January they got out of them and replaced them by euro-dollar bearish positions and reduced these CDS positions. In general, everybody is more or less euro-dollar bearish, and that means, of course, when you get a bit of news not going in your direction, euro-dollar pops a little bit higher. But the same way as for many years people were dollar short for many years. I was myself when I was on the buy side, and you can hold that position for very long. The same probably applies right now for euro. Short, that means if the world is short euro, it doesn't necessarily mean they're all going to be squeezed out anytime soon.
So the euro really bore the brunt of this, but the U.S. dollar has benefited, right? I mean, it's been up. It's not necessarily, though some say, a sign of fundamental strength. It's just because everyone else looks so bad right now. We've also seen that trade change up overnight. Is this truly a game changer here? What's your outlook?
I think it's not a game changer in the case of euro. What happened has been happening for the past few weeks is that the economic story out of the U.S. is quite good. Persistently, consensus is too bearish on the U.S. economy. The U.S. economy is a very plastic one. It adapted extremely fast and well to the massive shock it went through, and it's performing very well. It has a subprime crisis. Europe is just going through its equivalent with the Greeks, and it's quite early in that process. The U.S. economy is looking quite good, and actually we're relatively more bullish than consensus over the long term on the U.S. economy. We actually think a lot of the flows are going to continue to go into the dollar. They're not going into govies right now. They're probably going into credit, and that's including probably central banks. So they're diversifying their assets even within the United States.
Why did the dollar strengthen on Wednesday and earlier in this week when we saw these jitters in the Treasury market and not much demand there for the 5s and the 7s?
Well, because essentially on a purely technical basis, the yield curve had been held in a very tight range. And what we know about tight ranges is after a while they basically build up the potential for what we call a jump, that is a breakout moment, as the algo will call it. It means people waiting for this move out of the range, and when it happened, it's been pretty brutal. Now we're calming down a little bit from that side, and because it was a purely technical fixed income driven aspect of it, it has actually was seen as a positive for the broad U.S. dollar. At the same time as we had significant stop losses going through with some big names, and that has also helped the yield curve to rise steeply and the swap spread to go negative in the U.S.
So what's got your interest outside of these developed economies? What you're looking at many of the commodity producers. I mean, what's your favorite trade right now, Sebastien?
Well, in the commodity producers, we're actually not that excited about them because of A, the dollar strengthening, B, we are probably going to see some form of tightening in Asia, specifically in China, even though they really don't want to do it. That is typically not that great for the commodity producers, so it's not that exciting. We're a bit more interested in the broad Asia, looking in India. We have quite a bullish case on a multi-year basis for India and the Indian rupee. So I think if you want to look at something to invest in and be very patient and deep stop losses over the next few years, then I guess India is the right way to go.
All right. Thank you so much, Sebastien Galy, on Friday, joining us from the floor at BNP Paribas.